a Jay Pelosky, que me parece que ya está con nosotros, como digo, para hablar de mercado, para hablar de lo que nos espera hoy, mañana más bien en la Reserva Federal, y para intentar avanzarnos un poco a qué va a pasar ya no solo en la reunión de mañana, sino también en las próximas reuniones, porque lo de mañana parece que el mercado lo tiene muy claro. Jay Pelosky, founder at TPW Advisory. Thank you so much as always for being in Negocios Televisión. Good afternoon.
I'm happy to be with you.
Jay, Fed meeting tomorrow. The market is giving a 99% probability of a pause. Do you think that the hiking cycle is already over?
Yes, we do. We think that the disinflationary cycle in the United States is very well established as supply chains ease. And we think that the main focus going forward is on the cooling labor market, which will restrain wage growth. And then perhaps more importantly, the rental market. Rent is a big part of the CPI, particularly headline CPI. And we know that rents have come down significantly and are now negative year over year in the United States. And that should kind of cap the upside for inflation over the next, let's say, 4 to 6 months through the middle of next year.
Despite all of this that you're saying right now, Jay, the market seems to be very cautious about what may happen in next meetings. In fact, bond yields are still going up. Do you think that the bond market does not believe that the Fed is done already?
That's a great question, and the bond market has been kind of oscillating. I wouldn't say it's really gone up. If you look at the 10-year, for example, it's at 433. It was at 433, several months ago, and then kind of softened and is now back up. Same with the 2-year, which people pay a lot of attention to. 2-year just over 5%, again, right where it was several months ago. So I think that question remains to be seen, right? Whether the bond rates have or yields have peaked. I think that bonds at these levels are more interesting than they have been in some time, but we are not big believers in the rate cut cycle that is priced into the futures market. I think 100 basis points of cuts next year, that seems high to us because we, again, have a different point of view at TPW Advisory, namely that we're early in an economic recovery cycle as opposed to late cycle.
New company today, by the way, Jay, in Wall Street, Instacart. The last IPO that we had went very well last week in the very first day, but it's already fallen lower than its first price, which was $58 the share. Do you think that this will also be the case with Instacart? I was already reading in MarketWatch that it is expected to open in Wall Street, to begin in Wall Street with over 30% of upside. Do you think that this is going to be the same case as ARM, that we had a very good first day, but the rest of the days it has been going down?
Well, I think it's interesting that the IPO market seems to be reopening, right? That's a good sign. That's a sign that people are becoming more confident in the future. And I think that reflects the fact that volatility levels have come down significantly. If you look at the VIX, for example, which measures stock volatility, it's at the lowest it's been in several years. If you look at the MOVE index, which measures bond volatility, and kind of goes back to what I was saying before about rates kind of just pressing up against levels that have been in place for 6 months or more, the MOVE index is under 100, which it hasn't seen for several years. So markets are saying that things are stabilizing. We've come through COVID. We've come through the inflation spike that followed COVID. We've now come through the Fed rate hiking cycle, and now we're approaching stability. That's what the markets are suggesting. And so then you have the IPO market opening up. The other point I would mention is that these companies are coming at a massive discount to their last private cycle capital raise, right? I think Instacart is coming at about a 70% discount to the last private capital raise, and suggests that public markets have repriced In private markets, where there's still so much interest in things like private credit, etc., the private markets are just starting to finally recognize the repricing that's already gone on in the public market. So it's an interesting shift from private market euphoria to public market discipline.
Jay Pelosky, founder at TPW Advisory, as always, it's been a pleasure to have you here. Thank you so much and have a good day.